Good afternoon, traders. Hope we're all doing well. Hope we had a great weekend and we spoilt our mothers for Mother's Day. I know I did. I'm just trying to get a few brownie points, but no, I did all right. We had a dinner last night, so it was nice. Hope we all had a good time. What we've got, so for new traders in here, we'll kick it off in a minute. New traders, just take note of the general advice warning for the live stream. And we don't give any specific advice or anything like that. So what we discuss is just our own points, our own views of what's happening in the market and what we expect to happen. You can join us on Twitter in the top left-hand corner. Just follow us on Twitter. We're going to get more active. I think we spoke about this the other day, probably on last Thursday and Monday. Just saying we're going to get more active on that, and we do. We're going to be sending out a few more different things on Twitter and also on Facebook. A few articles, just bits and pieces. So it's worthwhile just keeping in touch with us there. And also on YouTube on the bottom right corner. So every time, if you subscribe to us on YouTube, every time we do go live with a stream of any sort through TradeSetup, you'll get a notification from YouTube. So, g'day Paul, how you doing? I've got your emails too. We're going to discuss. Well, just for everyone here, what we were talking about with Paul and myself, we've spoken about a few times, is the banks and the fundamentals behind the banks as opposed to, say, technically trading them. So we're going to have a bit of a view on the banks. I've been following them lately, and they've been knocked around a bit in the last few days, probably a few weeks. But we'll talk about the technical side of it there, and I think they're looking quite good at the moment. So we'll go through that. We'll go through what's happening with the market at the moment. Not too much. Just saw some of the comments popping up. Not too much on what was it? I've lost my train of thought now. Oh, anyway, don't worry about that. What we were looking at on Friday night, not much happened there in the way of things. So we'll take a bit of a look at the indices and just what we could expect, because the market's getting a bit. Probably our market opened down today, and then we've bounced. We bounced a bit. I think we're down about 20, 30 points at one stage, and we bounced quite hard. So we'll go over sort of the major indices and what they're doing and how they're looking, and potentially why we lag a bit. Anyway, let's get into it. Let me just minimise this. Let me get the live stream back up with my photo. There we go. All good. Let's get rid of that. Let's get the market. So what we've got here on the XJO, that's on the daily chart there, guys. So it's pretty much, we can all see it's an upswing. It's just this last few days is what we're looking for. The market's been well and truly trending higher. You've got these minor levels. We just maximise that a bit. So these inside levels, you've got a major one at 50.50, and that produced that leg up off a major lower high. But really, it was just coming back down to a structural support level. Pushed up, had a good little run up through 58, pulled back, had a little inside level around 56, and then we've got another. It retested that 58. It was 58.27, I think, at that stage. Pulled back, made another high low. Somewhere around 56.75 thereabouts, and that was it's all just holding trend in context to what's happening. So it's just recently we've had that little push up through around 59.50, bit of a pullback to 58, retested that zone, and we pulled back the last few days. So I think this has got a few people nervous. We've seen a bit of not strange price action, but a bit choppier than usual, than what you'd expect for a trendy market. So, but really, what we're seeing, this price action, this structure here, it's still holding, and we'll just draw this up now. I'll get it up probably a bit better. And this happens time and time again, but this is where people, the bears come out, the bulls go hiding for a few days, and then everyone's talking about a market top, which they're doing across the board. And we'll talk about the S&P in a minute. We sent an alert about that a while ago. Well, last week, not a while ago. I don't know, it's Wednesday, Thursday, Friday, one of those days on the S&P, and you know that people have been a bit bearish because there's a lot of short positions stacked up, but the structure is still there for long, so there's no reason why we can't continually just squeeze out. And don't forget, trading's all about fuel for a move up or down. What's the potential fuel going forward? What could trigger a move up or down? Is there anything in the pipelines in the way of news? Now we've just had the budget on the ASX. So that's probably what's caused a bit of this. And of course, the banks have got belted around coming into the budget a few days before. So, and then just after it's been knocked about a bit, but they're still holding trend as well. So for me, there's only so much you can read into it, or anticipate. You don't anticipate when you trade, I guess, is what we're trying to say. You don't try to second guess what's happening. You just trade what you see. Let me just take a bit of a... So we'll take a look at the banks. But I guess what I'm trying to say is that technically, from a technical standpoint, this trend is still well and truly intact. We've got a support zone that we've got an eye on here. It's just around 58. Say it's 58. We're just trading down there now. Where are we at the moment? We're at 58.29, so a few points off there. But that's still holding that leg higher. There's no reason why... Let me just do this. There's no reason why we can't hold up a little inside high low here, or maybe retest a bit of a washout like we've done, time and time again. We washed it out there. We retested down through here. We've washed out this low here, but that was down towards a major low of the elections, the US elections. So that was pretty much touched to, I think, to the T really, and it got rejected, and that led to a nice strong leg up. So we could be doing the same thing in holding a high low in context to this uptrend, and it's a nice little retracement back off there. You've just pushed through those highs. I'd call that more of a double top than anything else. We did wash out the highs by a few points, but nothing significant. And that tends to lead to another retest of the higher low, which we're in the process of doing now. So for the bears out there, just be wary that it's not going to turn around and squeeze you back out again, and the market's going to rally higher, which you can do time and time again. And you can see this type of structure down here. We've got that little retracement, a few negative moves. Again, went back down, retested and washed out that low, and that led to another push higher. Then we built a higher low, so we are still grinding high. Does that make sense, guys? We've spoken about this time and time again. I just wanted to reiterate it today because the market's getting a bit choppy. It's even got me thinking what's happening. You look at it and think, oh, okay. We've always got an eye on shorts. There's not the clear-cut setups that I like to look for. I'm not finding those as regularly as what we have in the past, and some of them we're getting chopped out of a bit, which happens. It's just the nature of trading. You've always just got to be wary of what's happening on the bigger picture, but if this is the case of a bit of a pullback, we've been cut out of a few, but this does squeeze again. There's going to be a few that's going to start kicking off again, and there's always going to be a few trades out there. And I think banks is probably one area we've just eyeballing at the moment, purely because of where they've come to and where they've come from, and they're still holding trend. So there's not much against them at the moment. We're really just looking for some setups. So what Davin just wrote in there, what we talk about when we talk about squeezing or a trend to start to continue or whatever it may be, when everyone's getting a bit bearish. I mean, you can look at charts, you can see that those the levels are still holding nicely, but everyone's talking bearish. The news is always, they're always going to talk it up a bit. They're going to play on the fear factor. But everyone's talking one way, and they can turn around and head straight up, and it just catches everyone off guard again. And it's more just fuel for that continued move higher. Yeah, so like I said, the trends up tend to continue in the majority of position for falls. 2003 to 2007 straight up. Actually, let's just go and have a look at that. Let's see if he's right. So Davin's mentioned this to me a few times. We've been looking at it. Let's go back here. I'll probably have to go. 2003. So Davin said he traded this. I think he started off short a bit and then just, at the start, and then took advantage of this move up here. So everyone was talking it up. I think he was saying they were talking up housing. Everything was negative, blah, blah, blah. And the market just took off and just kept going and going and going. Not saying that that's what we're gearing up for, but certainly this structure looks quite nice. And if we get through 6,000, there's nothing to say we can't just keep breaking higher and keep pushing and pushing and pushing. And you've got these higher lows on a monthly chart. So you've got this low right there in 2003, high low built at 32 thereabouts, 2009. That was after the GFC. Obviously, big washout, big flush out of positions. The world was ending back here, don't forget. So when the world's ending, everyone's fully bearish. It's turned around and started bouncing back up again. Held higher lows, around 38 to 4,000 just in here. And that produced that leg up to 6,000. We pulled back, and basically that higher low is confirmed now around 48. So if that's the case, that could lead us up and through these highs. We don't know, but that's just something to bear in mind. And look where it was overextended to the upside. It started off mid-2013, and continued there for quite a long time, right up till end of 2007 when we got the GFC. So it's just something to bear in mind. Don't try to get biased two way. It's hard not to listen to news sometimes, but I figure once we get through 58, then I might be a bit concerned about what's happening. But if we don't, then you're really just following the trend up. So let's just go over now as a good case example. Let's take a look at I'll just get the S&P. I think it's a good one to talk about because we know that people are loaded on that one on the short side. Let's just go the alert we had up here. So it might just take a second. And if you just go over all the indices, we'll go over the FTSE. The FTSE is still kicking on. We spoke about that probably mid last week. It could potentially be one just to keep an eye on for upside. That's looking great. I do like that one. The FTSE, and it's continuing about 150 points since we last looked at it. So that's the S&P. I'll probably drill it down in a second. But you can see this move up here. It's been strong. So there's no reason why when you get that lower high, people are going, we're talking the end of the world again. It's a bearish move, blah, blah, blah. It's pushed down. It's held up around 23.25, retested that zone, and then it's starting to squeeze people back out again. So this could be the start of a new leg up. If that's the case, technically, that looks really nice. Contraction lower, some lower highs, lower lows, then we start holding up at that level. So if that's going to lead us to a leg up, another leg up, there could be quite a bit in it. We've just popped our head through those highs. Would have been a few days ago. What do we got? I think it might have been Monday even. But and we've just contracted off that highs on some minor time frames. If we just go down to a 4 hourly, can't remember what chart I had up. Let's look at the hourly chart anyway. But you can see that price action. If there's any questions as we go, guys, just shoot them up. What's average PE ratio in 2013? Don't know. Couldn't tell you, Paul, to be honest. I don't look at those sorts of stuff. Of the actual ASX, was it? I wouldn't know, to be honest. They could be undervalued, could be overvalued at the time. Who knows? So what we've got there, we've got this move down, and that's that low at 23.26. And then we've had that leg up, pulled back, held a higher low around that 23.77 or 23.80 zone, and then we continued to squeeze them back out. So I think shorts to longs, shorts are stacked up about 70%, whereas longs are stacked up at 30%. So what that's saying is there's quite a bit of fuel that could move this. There's quite a few bears out there with the claws out, digging in, expecting this market to roll over. But technically, it's not looking bad at all. It's looking really good. It's the opposite. That structure looks quite nice. I really like it. And you can see these sort of curving act, and then they start accelerating higher. So there's no reason why this just now, next night or two, could just lead to a break up through those highs at 24.06. And really start to put pressure, further pressure on those short positions that built up. So what we can see is that structure looks great, price action looks great. The fuel is definitely there to move higher as the bears are out. There's enough people. There's people probably on the sidelines, but there's also people in the market. If they get out, they've got to push it higher. So there's enough there to really continue this move higher. Continue the trend higher. The S&P looks good to me. If we go back to, we'll get back on here. I'm just getting the charts up here. What's that one there? Don't worry about that. It's not the S&P. That's the S&P 500. That still looks nice. We've got the FTSE. That's when we were talking about it back here. If we just go back to the last, it doesn't really matter. That's looking positive. That price action looks really good. I think it's just trading into new highs now. That's all-time highs, don't forget. That can kick on. We've got the DAX. The DAX is teetering on making a new high again. It's still trending higher. The Dow, that Dow is just hovering around those highs as well. Now, if this doesn't contract very low and we just go sideways for a while, I think that's good emphasis to really kick on again and start catching people off. My researcher, I reckon he's Googling now, Paul. I like that. We'll see if we can see what he comes up with. Hey, look at the B to be able to work out shorts or longs. Well, that's a good question. We just got the proprietary signals that we've developed, and we look at a few different indicators. Obviously, we don't want to give away too much, and this is how we sort of work towards how many we think produce short, or how many shorts we think there are. And you can probably go around and you can probably just go around and look at different forums on what they're talking about. There's different Profitly. I'm just trying to think of one that where people put up their results. I can't think of anything offhand, but they put up their results and way they're positioned and things like that. You can just go do a bit of a search, and it's a bit of a look around to see how they're biased, which way they could be biased, and you'll probably find that a lot of them are short, especially on the S&P. A lot of it's S&P based, S&P 500 or the E-mini. A lot of it's based there. We don't know how they're positioned on the FTSE, for example. But when you see this type of contraction, this through here too, that's one thing to look at there. When it's going up like that, I think that's starting to go from, I'm just guessing at this stage, if we look back in October, when the market was selling off, that there's short positions coming in there. They're expecting it to roll over. It's still holding the structure. When it was down at 6,700, it's still a minor higher low, and that's led to a washout. So I reckon at this stage here, you probably haven't got the same weighting of shorts to longs. It's probably becoming a bit more even, and then the market starts to, anyone that's gone long is starting to take some profit off the table. And it's probably happening here when you get those lower highs. That there's a few shorts edging into the market, probably starting to outweigh the longs. But like I said on the FTSE, we don't quite know because the data's not readily available. I hope that helps, Wayne. We just know that on the S&P, when you do a bit of a look around, I just get onto different sites, different forums, things like that. I'll just try to find some. If I can find out some, if Davin can remember some, we'll see if we can put it up in the chat, just so you can get an idea of who's weighted which way. Now, what else we got? Hang Seng. I'm just looking at a few other. They're all in highs. The fact that they're, and this is where people get caught out time and time again, the fact that they're in all-time highs is no reason to short. If you look at it, especially on the indices, people will look at it that way, so it's overextended, it's overcooked, let's just go and short it. And they're the ones that get caught out time and time again. It's trying to look for those setups. And at the moment, even on the Hang Seng here, we've got a high low here, back in March, another high low just in here. It's still holding high lows, so there's no reason to be shorting that just yet. Now, this is what brings in shorters, sellers. When you've got this move up here, it goes to make another new high. It can't. It makes a little double top. We've got it just in here, and it starts to sell down. That's going to get sellers back involved. But if you probably look at the weekly chart, let me just try to figure out where that was. It's back in September, October last year. So I think that's about here. So it's had an extended rally. You know that people are probably going to be looking at that. But on the weekly basis, the MAs have just crossed up, and we've contracted all the way back down, dragged in quite a few short sellers, and they're the fuel to squeeze them back out again. So what stage we're at now, we've just taken off some new highs. Say this is the Hang Seng, don't forget. Just push through those highs, so that could extend a lot more on the Hang Seng. It could push up to those highs at 28. We don't know what's going to happen from here, but definitely all the markets are looking quite good. So there you go. So when you look at, if you look at it on the flip side, what I was just saying about when you get the indices, for example, say let's go back to the DAX. The DAX is probably a good example. The urge for people to sell up here would be quite high. You're into new highs. It's looking, okay, we're in new highs. Let's take some profit. The urge would be quite high up there. You'd probably find, and that's why people are jumping in. They're looking for a setup somewhere, and they're just trying to find something to support their view, why they should sell it. Who knows what they find, but look, there's going to be times where you get lucky and you pick the high and you get a bit of a sell-off, but I know people have done it in the past, looking for it, it's overbought, and purely I can't think of any other reason why they were buying, well, they were selling into it, purely the fact that it's gone too high. It's the upper end of a channel, for instance, in an uptrending channel. They're at the top side, obviously flushed out. They got stopped out, and maybe they've got it right, come back down, but it's still trending higher. So really, when the market's trending high, the MAs are pointing up. You're looking for pullbacks to buy into rather than selling at the top. I think it's too risky a process to sell into it. If you look at stocks, just as I can't think of an example. if we look at this same type of scenario when stocks are in all-time highs, they're making new highs. Everyone wants a piece of it. For some reason, they don't want a piece of the index, if that makes sense. Everyone wants a piece of it. It's into new highs. It's going to the moon. Great story, whatever it is. And they can really kick on quite strong. On stocks, you want to buy it, but for some reason, the bears come out when it's indices. Just trying to think of another example on a stock. What is it? Everyone's a winner when a stock is trading into new highs. It's got good structure. So for me, it's the same type of process. What we're looking at on the indices, they're in new highs. A lot of them are trading up towards new highs, maybe just off them a little bit shy. They're looking good. The structure's looking great. So really, there's no reason why I would be selling it anyway. I hope that makes sense, guys. A bit of a rant, a bit of a rave. But what we'll do now is just start to look at a few of the banks. Well, we'll look at the top 4 anyway. Just want to go over. We'll look at them here. So that's the XJO. So really, if it can push through, if it spikes down below 58 and holds a break, we close down below that support zone, then okay, we've probably got a bit of a problem. And then we'd have to start looking at what's going on in the bigger picture, things like that. But for me, it's still there, and we got rejected today. I think if you look at intraday, we just look at a 5-minute. Thursday, Friday, Monday. This price action here, opened down, sold off, and then got rejected. We pushed all the way up, took out the previous day's, the close. And we're pulling back. We're potentially building a higher low here on the ASX. So it'd be interesting to see if we can finish up towards that 58.45 by the end of today, and then just see what the US does tonight. But generally, that was a good little rejection of that 58.10 down towards that support level. Where I was looking at the banks. Let's just take a look at. We'll go through the banks now. They've been. You can see all the. What was it? I don't know exactly what the budget said about them. If anyone can sort of put something into chat of why. But like I was discussing with Davin previously, the banks are money-making machines. If it costs them more, they offload the cost somewhere. So really anything that people think that really they could be constrained by profit and things like that, they'll offload the cost somewhere. They put up the charges, they do something, and that's why they're obviously very strong. If we look at the technicals here, what's it saying to us? If we can just draw it up, actually, this is the ANZ we'll start with. They're all in a good zone. They haven't broken the trend to the downside. We've got a major support zone on ANZ way down here, and then we're holding these high lows. It's the same as the ASX, obviously. We're potentially holding a high low here, just washed out, touched down there, but closed higher on the high. But the sellers are really giving it a good shot, from pushing it down ANZ from 33, I think it's 33. Those highs there got hammered over a few days, all the way back down, but it's still just on a support zone around 20, was it 28.75? Thereabouts, say 28.50 to 2900. It's just down on that support zone, and that effort to push it down there, it got overextended to the downside. Oversold, however you want to say it, but it's still holding the trend higher. So that's something definitely keeping the zone. So what we're looking at now, what I would be looking for, down at support, I can see that it's extended down there. Maybe it's flushed it out. If we can get a bit of a flush, maybe we flush it out and we start building and holding some higher lows and then building for a little move up. But I want to see just that action and that support zone to hold. I don't want to look for this type of price action. I'm not looking for that. That if I buy into that, I think it's more of a guess than anything else. I would like to see this evidence that the buyers are stepping in. Whoop, where'd that go? Evidence like this that buyers are stepping in, you get that rejection off, which we did get potentially just a few days ago. What was that, Friday? Wednesday? Yeah, reaction higher. Nice green candle off the lows. And potentially we're in the stage of going back down to retest it, maybe holding a higher low here. So far, so good. The day is green, if I'm right on that. Yeah, that day is green. So it's looking good at the moment, and it's in a good zone. Probably a bit more price action I'd like to see, and then I'd like to see it, like I said, just hold some high lows once we get that set up, and then look to get into it, because I think they could really kick back up to those highs. If we go over to NAB, I think this is one of Dav's favourites. He doesn't mind this at all. Just want to get up a bit more. If we go back to the, we just take it one step back to the weekly. That's a major high low in here through 20 or 21 that led to these new highs right up at 39. We've had a good correction back, so it's washed out of quite a few traders. I know that's a longer term. It is a very, very much a longer term chart. We held a high low again at around 24, and we've been working off that low. So this leg, although there might be a bit of action around, it could keep leading higher. If we go down to the daily, again, it's a bit like ANZ. You're down on a good little support zone. It's extended a bit further down to the downside. Rather than hold up a high low, around $30 or 30.50, it's tested all the way back down to that the previous high low. NAB's holding up above that high low around 31.50. It's holding up a bit above that, so it hasn't retraced as far or hasn't corrected down as far, but still, it's been sold heavily. So the sellers have really given it a good nudge, but the buyers are stepping in a bit higher. They're happy to step in a bit higher. So what does that say? That means that buyers are happy to give it a bit of a go. They think it's going to go higher. That trend is still holding higher. The technicals are still looking good. So for us, again, it's just looking at those the setups and just try to see those setups there. Bank levy. Oh, that's right. So does that make sense here, guys, what we're seeing? And CBA, a bit of that same price action, although the last couple of weeks have been pretty heavy. CBA, that's a slightly different story than, say, NAB. They're all exhibiting very similar price action. So NAB CBA for me, a good little support zone down at, what was it, 69 to 70, washed out those lows. Another lower high, pushed down, retested. That was well and truly rejected on a ever so slightly higher low. Sorry, we're just going to have to get rid of something in a second. No, we don't. And then the market's had that good leg higher up to 85, close to those highs. I think it was touched a bit below, maybe right on. Is that right? What level is that? Oh, that was that previous inside high at 2016. All right, so that's just the previous high. And then we've held around this level. So the key level was really 81. And then it's kicked up through the highs. But then it's got, obviously, like we said, poleaxed. It opened below, but during the day that was rejected. So on the daily candle, it finished above that support zone. So that's not a bad sign. It's still been sold quite heavily. The buyers are stepping in. They were happy to step in just below and push it back up during the day. So again, it's a similar type of price action I'd like to see. That push down, if we get that hold up above there, maybe some inside higher lows, and then see if we can push up and just get that kick up and through. But I think for me, I'd just like to see a bit more price action. Bendigo, we'll talk about that in a sec, Paul. We've sent out an alert about that recently. I think that's a cracker. And actually, we'll go over that once we do Westpac. But you can see they're all very similar price action. I think the keys look how hard they're being sold down. They were obviously sold quite heavily, and you would expect that after that announcement. But I think taking that opportunity to see what's happening with the price structure, what's happening to the price action, we expect washouts. How far, if this market rolls over from here and just goes down, okay, we'll have to take that on the chin. But we didn't get the setup either. So if it does hold some lower highs and higher lows, we're looking for really, the market's contracting in. If you do similar little signs, contracting in on itself, like that type of price action that's banging around in between here. Then we're looking for a sign of which way it could go. We're biased to the upside, obviously. And we'll just see if they can break up. If it doesn't, if it breaks down, we might get a deeper correction. We don't know what's going to cause that, but again, it's going to take a bit more effort too, because the market is down in sort of in that oversold territory. So a fair bit of fuel on the downside. Fair few sellers have tried to push that down, but it's holding up potentially a nice little high low. All right, what do we got? Westpac. I like Westpac. I think it's probably because it's the only one I like trading. I've actually traded before. We've had a go at that. Let's look at that. Again, they're all exhibiting very similar price action. The four majors anyway. Key support down here, and it's been holding those high lows. It's quite clear on Westpac too. And again, this is in that zone where it's been sold down heavily, where it could easily hold up a higher low, and that trend up is holding. We've got pretty much a triple top through here, ever so slightly head and shoulders if you look at that sort of stuff. But But what it's led to is just a deeper correction than what we've seen previously. So it's corrected off here, pushed up, had another go, just took out the highs a bit, held some sort of little higher lows, had another go at it, couldn't get it, so there was selling in there. Probably a bit coming into the, what do you call it, the budget. That was probably prime, and then you've got some bad news, pushed it all the way down, but realistically, it's in a zone to easily hold up this sort of area here. Could easily be a higher low in context to, what's that, 31.50, 31.75, the previous higher low there. So, and it's had enough fuel, it's had a good effort to push it down, but it's in a good little zone. So just keep an eye on the banks there. Again, it's just a matter of, we're looking for that sort of contraction. I think it's going to be a bit cleaner maybe on Westpac. I think we'll see something quite nice if it's going to play out that way. I just want to see those little high lows. We were entered in this zone. So that was our previous signal, and we took advantage of that move up. I don't know how much. I can't remember how much we got, but did quite nice. In hindsight, that's been quite good. We traded that quite nicely. If we get this similar type of price action in here, like I said, that's why I'm leaning towards a bit more work to be done on those. If we get that similar price action in here, and we can see a clear-cut zone where we can put our risk, okay, we'll be in that. We'll give that a go. Does that make sense here, guys? We'll go over to Bendigo. Actually, maybe it's not. I lie. It's not Bendigo I was looking at. It was Bank of Queensland, I think. Bank of Queensland is probably a bit clear on that weekly. So on Bank of Queensland, just looking at that weekly quickly, we've had that washout of $10. That was back at end of last year, and that led to a little rally high at $12.50. Had that pullback. So off a weekly basis, the MAs have just crossed to the upside. So it's shown that the buyers are taking control in here. They're starting to take control anyway on the longer term basis. So if that's a longer term move, this is the first sort of sign that we could get a nice little strong, a strong move up and take out those highs at 14.75 and really kick on, or potentially up to 18. So if we measure that move up here from say 6 to 14, for instance, it's $8. If we take that from the low, that takes us pretty much straight up to 18, $19. So if this is a start of another leg higher, it all works out technically. It all seems to match up quite nicely. We just got to keep an eye on that. But I think on the daily basis, that's that little washout of $10, and that led to a nice push up. We pulled back, spent a lot of time between, say, $12.50 and somewhere around $11.30, just consolidating through there, probably most of the year. If we start seeing those high lows edging and those little spikes to the upside, and then if we get a little break of $12.40, I think this is one to definitely keep an eye on. I think it's got the price action. It's looking good. If we can show let me just get up the actual alert we sent out, just so I don't have to draw out the chart again. BOQ. So that's probably not it, is it? 10th of May. Now that was a couple of days ago. All right, so that's what we're looking at there. It's got that. That's the weekly chart. So it's got that washout there. Potentially that's a good zone for a major high low. It's just broken out through this previous high at 12.50 to 13. Just broke out through there. Contraction back in, build a higher low on the major basis, and that could take us up and through. And we got this little minor contraction now. If we broke up through, like I said, 12.40.50, I think that could be on it. You're going to be looking up to 14.50 and even beyond. Makes sense, guys? I do like that. So we've got an eye on Bank of Queensland. It's not Bendigo. I lied to you, Paul. If we just go, we'll analyse, look at Bendigo now. Let's just draw that up. So it's much the same as a lot of these others. Obviously, the bank's going to be very similar. It'd be nice to trade. By the way, does anyone know what the ETF on the financial sector, the code is for that? I can't quite remember. I know the STW is the top 200 stocks. Is basically the ASX200. It's the ETF on it. I know there is one on the financial sector. I just don't know what it is. I know there was one in the US we used to trade quite a lot of. This is years ago. Just before just over the GFC, we picked it up at the bottom and did quite well on that as it was going up. So I'm just wondering if anyone does know the code for that. on the ASX. So what is it? NAB, all those in the sector ETF. We could have a look at that, because that's something that, from a fundamental perspective, they're not going to go broke. You know, every time it gets sold down, it's probably going to get bought up quite well. It might be a bit of a proxy for the STW anyway. Now, what do we got here? Good work, guys. That's beautiful. Let's take a look at that. Financials. Oh, that's not the tradable one, though, is it? So that's the sector. I know that's what we bring up previously, but it's not the tradable. Whereas STW, for instance, that's tradable. You can see the bid and the offer. So we can go by that, you know, as a proxy to the ASX200. But I just wondered if there was one. There may not even be one, guys. I'm pretty sure there is, though. But all right, what are we looking at? Let's just go over to Bendigo. So on the monthly, I mean, there's no doubt we've had that move up. And then the GFC washed out a lot of long traders. We've been holding those higher lows, pretty much the same as the ASX. Higher low in here at 8, so we've just break it down. So really we're at the next level to contend with is up at 1450. On the weekly, we've had a good little leg up here to 1350 or so. Had a correction, so the MAs are still up. It's still looking good. Probably, we'll just drill that. So I think the level to contend with there, if I'm right, was way back 1450. Am I right? Oh, okay, so that's at high. That's the one we're going to be concerned with. That's a major resistance level out there. So we could be on the way to at least retesting that. We've got another little minor level, 13, an inside level anyway. But you can see we've had that leg down, pop up, contraction back up, deeper correction, push back up, a deeper correction, down, and we've held a little higher low there. But this major level is just broken, so that's what we're calling the anchor. I know it's we've come, and it was quite a deep correction. You probably wouldn't trade it just on a breakthrough there, because then your stop would have to be way down, way out of whack. But it held higher lows. It was quite good, and then accelerated through up to 1325. And now we're just correcting off that level at 1325. So now, this is a weekly chart. We haven't got confirmation of a buy just yet, but you want to be looking down towards the dailies. Let's get that over there. And I think it's actually not looking too bad. I mean, to be honest, I don't think it's looking quite as good as some of the other banks, some of the majors, but it's showing some good signs. If we just go to all right, so we know we've got a key level up at 1450 on this. On the daily basis, that trend is still holding up. You've got all these high lows building with a move up. You've got a major, so we've come off, contracted lower. And again, for me, it's not looking too bad at all. So we've had that. If we just draw that. Sorry, I'll just take out this level. We've pushed down. That's contraction. We've had that contraction right back in, down to pretty much retest that uptrending line, upsloping line. We've touched on that, broken out. So the key level at that stage was probably about here, just below 12. It broke up and through. We've contracted back. And then we're holding higher lows. So it looks like we're coming out of contraction into expansion, which would lead me to believe that we're trading up towards 1340 and above. So I don't mind that. MVB. All right, we'll have a look at that. Yeah, there's a good little question there. QFN, financial ETF. We'll have a look at all of them, just see what they've got. So you can see that price action is not bad. I like that. We've got it probably a bit ahead of itself with that push up through 1350. Contracted back, but we're still holding that nice trend higher. We've got a higher low here after all these higher lows through here. Inside higher lows, what we've said previously, inside to this high at 1350. But I think if we can just get that little push up, say through 1250, that could be a goer. We might get a bit more of this price action. May take a bit longer, but I think we're on our way up towards 1340 and above. So, I mean, all that's conducive with the higher ASX, like we discussed before. Does that make sense there, guys? XFJ, I've looked at that. QFN. Better shares. Okay. So you do know, guys, that, excuse me, there's quite a few different ones too, done by, Better Shares is one of the producers. There's iShares, there's, don't remember the others, but it looks like it's the top 200 financial sector. Okay, so that's tradable. That's good. Not much. Whatever else we got? OZF. SPDR. So that's not really that big either. In the US, these are massive. It's a bit of a shame that we don't have more volume and liquidity into them. But they do hold the, obviously they're made up of the top 30,000, 10,000 of the top financial. I don't know how many financial shares they're made up of. Let's just see if we can get a profile. Exchange traded funds seeking to provide investment results that correspond to the price and yield performance of listed Australian securities involved in the financial sector. I don't know how many of the top is made up there, if it's just all of them. Anyway, so there's a few there actually. What was the other one? MVB. Okay, so that's the banks, not just finance, but that's the banks. It looks like it's trading a bit higher. Trading a bit Van Eyck. So what you can see, if you just take note of those codes, it's probably worthwhile looking at those for a bit of overall banking sector exposure. It's just trying to pick the one that suits, and you can always Google them and just find out what they're made up of if you're uncertain. It looks like the one Dave put up as MVB is just the banks, whereas the others will be the financial sector, which I don't mind those. But it's worthwhile just remembering those, trading those as an ETF. All right. Any questions on what we've been just discussing so far, guys? Is there anything that you want to talk about before we get into it? But that's, I guess, my overall view of the ASX, what we could be looking at. Like we've spoken about it before. Just don't get too caught up in the hype and the news and everything for the downside, because technically we're still holding until we break a key level. I think it was, what did we say, 58. I think it's just worthwhile playing this as potentially a high-low building and washing out a few more of those short sellers in there, or catching people that might have exited some shares, catching them off guard, heads high, they start getting dragged back in. We'll just see how that plays out. Anything you want to look at? Enough of my ramblings. Oh, sun. I know you spoke about that, Paul. Oh, this might have been the one. I think I actually missed this one here. To be honest, this one didn't catch me off guard. I'm just trying to let me find the setup for it, what I was looking at. Sun. Oh, I wasn't actually. I was looking at it on the weekly chart. So I was back here. Or was it? And that's when was that one? So this is actually the alert that we sent out. That's the 12th of May, so it was the one prior to that. And that's the daily chart, so that was in here. Just find out, yep. So that was in this zone here. That's not what I'm trying to do. All right. So this is what we alerted to a while ago. Trading the ETF versus the index using the CFD. Not really. I prefer CFDs, to be honest. But I know a lot of stock traders and things like that, like maybe they've got their accounts as a way to trade US. Not through the ASX, obviously. But there are, in the US, you can trade in Australian, like the STW, XAO, no, It's called something else, but you can trade it. It's traded on the US exchange, but it's the top 200 stocks in Australia. So you can either trade it one or two ways. And there's probably more volume over there than there is over here on the STW. In regards to what's the difference between trading both, like I said, I like CFDs because that's just what I'm used to. And it just means that if you've got a CFD account, a lot of people in this, if they trade their super, it's whether or not they want to trade CFDs in their super. But you can, if you don't want to, you can trade them through. You can have a similar type of exposure onto the ETFs. The problem is, like I said, they're not half. They're nowhere near as big as they are in the US. In the US, ETFs are massive. There's a lot of volume. No problems at all trading them. There's hundreds. Well, I don't know how many there are, but there's hundreds of them. You can trade short ETFs. The price goes up as the market goes down. There's double short ETFs. There's double long. So that just means that within that, there's for every 1 point move up, there's 2 point moves up on the ETFs. There's all sorts of ETFs. So what the good point is, if you trade, if it's not the ASX as such, because as a little story, remember the GFC when they're all talking it up, end of 2008, I think it was. It might have been the start of 2009 when we started looking at the ETF over in the US, the financial one. Everyone was saying the world's, it's coming to an end, blah blah. Things are just crashing. If you listen to the news, you would have been crying, in your sleep. You would have been sitting back, well and truly, because the markets were getting hammered and the news out there was just horrible. But in March, I think it was 2009, it just took off. So the reason why we started trading the ETF, you look at it, went from $70 down to 10, and you look at that and go, that was just traded on the back of everyone hammering the underlying shares, the financial shares. But the problem was, if you traded those financial shares individually, the risk was that they were going to go like Lehman's. They could go the way of Lehman's, I think it was, which what basically got done. They got that was it. They didn't get saved. They closed down basically. So that was the risk. But if you traded the ETF itself, the way you're looking at it, it means the whole of the financial, for that to go zero, the whole of financial sector in the US was going to go belly up, which is not going to happen. And that's the whole world. That's not a crisis as such. That's just a lot worse. It's not going to happen, is what we're trying to say. So that's the reason why we trade the ETF at that stage, rather than try to pick out a nice looking chart in the US trading a US financial. So there is benefits at times to trading those, as opposed to trading, you're trading sectors. You don't have to worry if one gets kicked out, if one goes belly up, if it's not looking good, they get replaced with something else. The same with the ASX200. But if you're trading either CFDs or ETFs, like I said, it comes down to what you can trade where. If you've got an account that's just straight shares, you don't trade CFDs at all, then okay, that's the way to have a go at it. Just expand what you can trade, and if you don't like it, you can find a shortable ETF. But if you've got a CFD account, you can trade the same. If you're trading CFDs, on leverage, on margin, then that's why I liked them, because I like the leverage side of it. But if you can't trade that in the super or anything like that, or you don't want to, then there's other ways to trade the financial sector or financials. Does that spill make sense, Anne-Marie? Now, what we're looking at is Sun for Paul. He sent across an email saying why I didn't buy that. I mean, right now, I think that's a little bit extended here. When we were looking at it, it was back, I think, on this green candle here. And you can see that the reasoning behind it. I'll just put it up here. That's the alert we sent out. At that stage, I was just looking for, I was looking for a bit of a deeper correction and a higher low to build, a nice solid higher low to buy into, and then, buy it in that stage. Or I was looking for a bit of failure off 1370.80. But in essence, what I was looking for was a setup, a buy entry setup. Now, we probably did get that. It was a lot, for me, it's probably just a bit too aggressive, and I wasn't taking too much notice. And it has, you can see, the market's taken off. It's gone from when we were looking at around 1340 up to as high as 1470, 1450 to 70 zone. What are we at? 1434. So, bit of a missed opportunity there. But the reason why I didn't get into that, or I didn't buy into that, was just that I didn't like that, for a push through there. I didn't quite like that setup, just banging straight. There wasn't a lot of work done. Not a lot of candles involved in that move to see that there's really strong evidence of buyers stepping up to the plate. But in hindsight, it would have been great. Right now, we just got to go where it is. If you just look pure and simply, that leg up there is not far off the length of move, I guess, of that leg up there. So the volatility projection is what we look at. It's probably got a bit more to go. But if we go back to a weekly and just look at where it's at, it's coming up into a little resistance zone up here. And looking at it from a pure technical point of view, it's getting a bit extended up here. So I wouldn't potentially be looking at that as a buy just yet. I want to see a setup. I want to see it pull back, build a high low, and then go. But I think ultimately, what we're discussing with Paul is nice price action. It's had lower highs. It's a big washout with this move down to 10, and it's held the high lows in here, 11.50 or so, and then again at 12.75 say through here. That's not what we want. That's not what we want. Just trying to drill in on that a bit. This price action through here is really nice. Held a higher low through that 70 to 80 zone, and it's projected up here, but we're just coming into a resistance zone around that 15 mark, 1480. So it's still probably got a bit to go. Potentially could just accelerate up and through, straight up to 15, wash it out, and then build some lower highs and pull back, and then I'll start be looking at it again. Well, we'll start to look at it again anyway. John, TOX and GXY. GXY, I like. Looks good. TOX. What do they do? TOX free. Profile. Waste management. Okay. All right. Let's just go back. So this is a monthly chart. Quite a big snapshot of price action. It's had that big move up, pull back, built a higher low, retest the highs. Couldn't get through at that stage. Had the pullback, bring in some more buys at a higher level. Good strong pullback. Sellers were stepping in there. Whoever's taking some profits, taking something off the table. Held a high low, really nice. And then you got that move up to the highs at 370, thereabouts 360. Had a bit of a pullback, and we are building that lower high there, but we're holding up around that 215, 220 zone. So if you just go back down to the weekly, you can see it clearer through there. It was somewhere around 215. So that's in context of this high low here around 180, 190. It's a good zone, and it is a good potential for that to easily hold up a high low. So what we're looking for now is, if that is contraction lower and we're going to hold up above there, we're looking for the high low. We're looking for an opportunity. So that's where it's worthwhile go down to the lower time frame charts. Where am I? Just here. Thanks very much for joining us, Paul. See you Thursday, mate. I don't like when it does that. All right, so we've got that. That's the level that we said just down there. Major support zone. Well, through there. And so what we're looking at, we've got some, obviously there's going to be some levels to contend with. A couple there. You've got a little minor one up at 245. So I'd say that a pop up through 245, and you can see that that's a ever so slightly higher low just in here around 220. If we can see that pop up through there and then a pullback, I think it'd be quite nice. It's probably not, you can see the difference in these two. Push down. What it started doing is holding a higher low, but it was higher than the previous low at 215, and that led to a nice good leg up. So we're looking for ideally the same type of price action that you can buy into, or you can see a nice setup through. The problem with the difference is it's had a good rejection off that support there. It got a bit higher than this high down at 245. So still, if we can get, if I can draw that, it's probably a bit hard to draw just here. That's a major support zone at 215, say. We've got that level just in here. We've pushed down, pushed up, and we're at the bait. We're at this, now we're potentially just coming up off a high low. So I would like to see this type of price action. A bit more of a squeeze in, and then maybe acceleration higher. So what I'd ideally like to see is some lower highs continue, but also higher lows and get that type of price action. So you might get something like this, that little squeeze in, contract right in on itself, and then bang, bang higher. API. Now we've got that. It's another one that's coming into a nice little zone. Sorry, we're just skipping over that one. So what's that? That's TOX. So does that make sense there, John, on TOX? But it is definitely, it's on a good little zone. It's starting to get a bit rejected of here. So at the very least, this high low, if it can't get through to new lows off these lower highs, if you can understand where I'm coming through, lower high zone here, resistance zone at 305, lower high at 280, another lower high at 245. That would, if you're negative, you're very big, bear, that should lead to a breakout through, but it hasn't. It's held that higher low just in here. So if we can get a bit of a squeeze, if you're looking to buy, if you're long, and then we get that little pop up and through, that would be nice, but it's looking like that zone is holding up anyway. GXY. Yeah, Galaxy, we've just sent out an alert on that one as well. This is a daily. We'll just stick with this. I like this on a daily. Yeah, I just haven't seen my setup just yet. What I'd like to see, but it's definitely, that's something we've got our eye on anyway. You can see there contracting in, held the little higher lows in here, and then this is a prime little entry. If you got it through 37.5, you know exactly where your risk is going to be, and then you're looking for price to go from contraction into expansion, which it did, just took off. So that would have been beautiful. Actually, that's where we traded, I think. Yeah, so we bought it just through there somewhere around that zone, I think, and we took advantage of that move up there, which is great. Well, most of it anyway. I think we missed a boat on a bit of that, actually. We might have had a couple of dabs at that, but then what we've got since then is that contraction lower, and you can see with this push up here, it's just broken up and out of it. So again, this is a bit like the price action we're looking at on, what was it, Sun? It's reacted quite strong. If we can just make that a bit bigger. It's reacted quite strong off that support zone. Well, let's just skip that. Let's get actual drawing tool. So that's your support zone there. That reaction up there was quite strong, and it took out a key level at around 49. We look like we're breaking up out of that contraction lower. So to buy it through here, I would like a couple of more days involved in that move, a bit more sideways action. So it's just going to drag in a few more players, but potentially that's a nice little setup of what we saw previously, and that could easily lead to maybe attack on those highs at 69.70. And your risk is going to be around 46, so minimal risk. That payout could be really high, could be really nice. So it is worthwhile. I think it's definitely one that's on the radar, and you've got that high low. Everything's lining up quite well. Does that make sense on that one? That's pretty clear cut, I guess. What else you got? API. Just knocked the camera. There we go. That's probably better. API, that was quite a big acceleration higher, but that's more due to this coming out on the weekly. So that was a good couple of weeks. It got that green week there, and then that rejection on that. Well, it is a red week, but that trend is going higher. That's looking really nice, I think, on the weekly. Oh, we should probably bring that back a tad. So move up. Contraction, holding some higher lows to get that accelerated pop to the top side at 220, even a washout, and had to pull back. Still holding in regards to the weekly trend higher. Nice pullback here, but then it's done a lot of work. You can see these, a good part of getting on a year of work. It's holding some high lows, another high low in here at 185 after 170. Just popping out through those highs. Say 205 to 210. This previous high, just washed it out, pull back, build that high low, started accelerating, got a few more solid days higher, and that led to that breakout through those highs at 220. Got rejected, so from here, I'll be dropping it down to the daily just to see what's happening. For setups. That's like I said, that acceleration high is more got to do on a daily basis. It's really break through the weekly resistance or previous days, had a good little pullback. We got done on that, which is a bugger, and we missed this move up. But we're still looking for that weekly to play out quite strong. It's come into the zone there. Looking for a pullback on Galaxy to push through 50 cents. Yeah, I just want, like I said, Will, on that one there, on Galaxy, is just to hold below 50. A few more days put in, but still hold, and then looking for that breakout through 50. That'd be nice. On API, it's looking... I'm just going to check on the comments. Yep. Like I said, on API, I just want to see a bit more, some good days, and then I'd like that area, that zone there, for a setup. So we've got the high low. We're going to be, I mean, if you can get a nice setup here, you can easily buy it and put your stop well down below, say 197. I think it's 199, 198, low 199. If you put your stop down at say 195, you bought it in here. Okay, that's still good. You hold, but you're going off different price structure. I just want to see, of course, my little favourable setup for us on API anyway. So there's a few, I guess, ducks starting to line up. You've got your high low through here, another higher low for this leg up. We're looking for this to be a zone where we're going to get that high low. Nice acceleration, so you know that the buyers are really starting to take control. If this is going to be a zone where we're going to see a high low, look at the stochastics. It's getting sold down quite heavily, but, and this is pretty much what Davin was saying, I think anyone that looked at the talk we did on Tuesday night, move down, pop back up, another move down, just to wash out a few more traders. So it's had two good moves down, but it's still in context of that move up. If we can see this as a high low zone, I just want to see a bit more, a little move down. I want to see a few days where I can see some high lows evidence and look for a break up and through. So just to hold more of a major high low around 215 and 220, that would be awesome. You know, sometimes it happens, sometimes it doesn't, but I think this one, going by the weekly, it's got potential. Looks good. Anything else, guys? Just before we'll probably call it a day. Actually, I think we'll call it a day here. Just see where the ASX is at. So down 3 at the moment. So we'll see how the US goes tonight, the next few days. See if we do hold up above 58, and we can just reject that zone and start building some high lows to take us up and through. I think well, if it does get through there and closes below there, and we see a few days below 58, we'll just reassess it from there and just see what's going on. But definitely, I think the US is looking good. Most of the major indices are all looking quite good as well. I think potential for a short squeeze on, really take out some of those short positions that built up on the ASX, and just to push it up and through and continue on up to 6,000, potentially higher. But we'll just see how that plays out. It's going to take some time. Anyway, thanks for joining us, guys. Thanks very much. We'll speak to you again on Thursday at 12:30. Cheers, guys. Thanks. Bye.